Also, the Fed might be done raising rates. How does that impact your sector?
Not as much as you would think. The energy sector continues to be one of the absolute best self-funding. So when it comes to, you go back 3 or 4 years, and my company's had 2 times, 3 times leverage. My average company right now has less than 1 times leverage. So, it used to matter, obviously, what happened to rates, because the revolvers would keep going up, the cost of capital would go up. Fortunately for now, their cost of capital is really more internally versus what they're going to have to go borrow, because most of them don't have to go borrow anything. They're deciding, Josh, of our free cash flow, are we going to pay out 50%, 60%, 70, because they only need, in many instances, they only need 30, 40% to reinvest in the business. So the question becomes, what do I do with all this excess free cash flow? It's a nice question that they have. But again, I always think it's kind of illogical when prices go up. There's certain weeks that some of the energy names in the energy sector gets hit the hardest, and because they're so self-funding, I just don't think that makes any sense.
Neil, give some ideas here for investors. Given that you think oil's going to be between 85 and 100 here for a little while, do you just buy the whole sector and forget it, or are there some that are even better poised than the rest?
I think that's a great question. I think there's some, if I thought oil was going to go to 100, maybe even stay higher, then I would say I'd probably go with more of the beta plays. But when I think if oil is going to stay, let's call it that band that you mentioned, 85 to 100, one, I look for the best investors, one that's not going to get me in any trouble operationally. Number two, those same best operators have some of the lowest cost. I mentioned 35, in some cases well below even $35 break even. So three that I like, one on the very large cap side, that's ConocoPhillips. Conoco continues just to accelerate, not only the Permian, international, the list goes on of their areas. Number two, a little bit smaller, that's Diamondback. You look at what Diamondback Pyramid Company, one of the best operators, continues to be one of the best operators out there, pays a great dividend and has a lot of buybacks. And then number three, a little bit newer company that's been around only publicly about a year, but the name is Permian Resources. The stock has actually done quite well this year. Some young guys that run, again, another pure Permian company. But I just think they're going to have exceptional growth, and they're going to have shareholder return that's going to follow that. So again, I just think those three are ideal, given they're fantastic operators with very low break evens.
Neil Dingman, thanks so much, and some actionable ideas for investors as well. Appreciate it. Good to see you.
Thank you.